Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun, looking at charts like the chart behind me, which is of Nikola, ticker symbol NKLA. And so here we are looking at it on the daily time frame, Tuesday, April 2nd in the evening after it closed at a price of 97.36 cents, being down just about 5.5% on the day and continuing down in the after hours by about 3.5%. And so, there are a few things to take away from this. One is that we did close on the day below $1. However, we did get two closes above $1, with Thursday, March 28th, being the first close above $1 in quite some time. So that was pretty significant, closing at a price of $1.04 before the long weekend. And so the last time that I did make a video on Nikola was on the 26th. And during that video, I was suggesting that it would be good for price to reclaim 85.5 cents, so marked by this yellow line. And I do believe that I did suggest that price could be going up to $1. And that is exactly what happened. We actually blew quite a bit higher than $1, hitting a high on Monday, April 1st, of $1.15. However, on that day, we did get a pretty big red candle suggesting that, we could not hold that level, but we did close again for a second day in a row above $1 a share, closing at a price of $1.03. And so, a couple things about this. One is that we did close not only Thursday last week above $1, but we also closed the month and the quarter above $1. So I do think that is significant. However, with this big pullback after hitting $1.15 and then closing on the second below $1, getting a wick higher up to $1.01, does suggest there's a lot of selling pressure there. There's not enough strength to hold it. And also that we did see this wick high on the 28th of $1.08. We did open above it, but we could not close above it. And so that does suggest there is a lot of selling pressure above $1.08. And then, of course, the trading day of the second being lower than that. But there are some levels that we did hold that could be significant, suggesting that we could be retesting the highs. But this could also be the beginning of some down moves, as we did get this big red candle. Any consolidation here could be bearish consolidation, and that could suggest moving down to these lower levels of this Fibonacci retracement. And so to create this retracement, I took the low hit on March 14th at a price of 58.2 cents, going up to the high of $1.15. It does look like after we did hit that high, we pulled back to not only the 382, but the 50% retracement, getting a wick down to that level at 86.6 cents, but then closing well above that, above the 382, which is at a price of 93.3 cents. So it does look like both of those levels have served as support. We did get a wick above $1, but we could not get a wick up to the 236 at a price of $1.01.6. So it would be good to see another close above the 382 here, so above 93 cents or 94 cents. And then if we could get a retest, ideally getting a close above $1.02, that could suggest that we will be making another attempt at $1.15. But if we do get rejected again from either $1 or $1.02, I do think price could be going lower, as it does look like as price has been going up, the volume was decreasing, and so that could suggest that there is to be a reversal, and we actually did see that on the second. But if we can hold the 382, make another attempt at $1, getting a close above that, another close above that would be good. But if we do see more wicks up like this, that could suggest that the top is in and we might be retracing to some lower levels, like the yellow line at 85.5 cents or potentially the 618. at a price of right around 80 cents. And one thing that I do find interesting is that the 786 does seem to coincide with the orange line that I have drawn, both being right around 70.5 cents. So, worst case scenario in my view is that we do pull back to that level before starting to move higher again. But I do feel like the best case scenario is, it could potentially be right around the corner to make another attempt above $1 and another attempt to close above 115. That would suggest continuation to the upside, but right now we aren't seeing that. We're actually seeing what I view as a lot of topping signals with the big red candle, the pullback from the top, the wick up here. We couldn't get a second close at or above $1.08, and that is really, the level that we need to be getting and closing above, if not 115. So, I would look for those levels, but hopefully we are able to at least hold the 382 for another day. I think that would be great. But, I think it is also good to be preparing for either direction, but it is quite possible. This big run, which, let's see, has gone up just about 100% to that top there. I think it might need to cool off a little bit before it does continue higher. So I'm not actually surprised at all about this pullback, and I am pretty encouraged that it was able to hold one of these upper levels. Even with this big wick down, that does suggest buyers were stepping in at these two levels. So that does look pretty good, but we will have to wait and see what happens over the course of the rest of the week. But, I think it looks pretty good. I'm surprised that it was able to make it so much higher than $1 and get two closes above. That's much better than one, and that's much better than none. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.